Welcome to Bears in Exile. Today is Thursday, January 26th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, XOI, GE, and XLF. Yeah, that sounds pretty good. All right. So another interesting day in the market, very wide range in the price movement, which was really cool. I like days like that, and at least it's not boring. Um, at one point, not being very high up, and at its low, forming a really nice shooting star, but pulling back up before the end, closing out with an inverse hammer, which isn't bad, not bad at all. We have no downtick, so nothing to say about that. Um, we still have the 14-day RSI moving average pointing up, so nothing really to say about that. After the massive technical damage that was done yesterday, it's kind of nice to have a little bit of a red day. Stochastics heading down, RSI ticking down, histogram ticking down, MACD sideways, and CCI up. People buying that dip. Not much of a dip. Ended down 22 points. Although SPX was, well, we'll see SPX here in a second. Nothing's going to change in the 60-minute time frame, so no real need to go over that. We're going to see if we have the negative divergence work itself out. But certainly, yeah, people buying at the end of the day thinking that no problem, and you can see how it bounces right at the bar, which is also makes sense. So, looking for that down move to the bar, which is now at 12,400. You know, a week ago it was 12,200 and then 12,300, and now it's 12,400. So, sure would be nice to see 12,200, but I think that at this point that might be a stretch. SPX worse than the Dow, and ending up with a spinning top. We do not like spinning tops, but there it is. Same as the Dow, the secondary is downtick on the MACD histogram, the RSI, the stochastics. A little bit of a difference down on the CCI, and still up on the 14-day RSI moving average. This one did take more damage by a good margin than the Dow, this being down more than half a percentage point, whereas the Dow was only down 0.18. So very different. And we do have a downtick on SPX, which does give us a target right about a hair below 1305. So 13 and a half points to the downside. Yeah, I'd take that. But we shall see. We shall see. The VIX, very nice today. Almost had, was able to maintain at 19, but not quite. Ending with a hammer. Possible reversal, but made a new intraday low. So that's not good. But getting below the lower Bollinger Band, yeah, it should pull back above that. This really needs to hit and break 20 for this to get serious. And stochastics ticking up. 14-day RSI moving average ticking up. Look at all that space it would have to go if we actually had a down move. CCI ticking up. Histogram going sideways along with the MACD. So there is a lot of potential here, but it has to take 20. Pure and simple. I'll get a little bit out of order. Go with XOI today. Very interesting. Check that out. We have a downtick today. It was resolved intraday, so that that move is finished. That bubble is fixed. What bubble it did have, we can see wobble and excessive separation, not major, but there. So that is all repaired now. So now we have to see, does it go down for a bar retest? That is the question. So that will be possibly answered tomorrow to see what direction it goes. Hopefully it won't just go sideways. But it is bearish engulfing. Real body engulfs the real body of the previous day, which is bearish. We have the stochastics turning down. along with the CCI, the RSI, the histogram, the MACD, and the 14-day RSI moving average is leveling out. So yes, this does not look good, and it does suggest the possibility of a down move in the market. TNA, yeah. Fat body hammer, almost. Be really nice if the tail was longer. We do not have a downtick. We do have a little bit of excessive separation. The stochastics just hanging out high. People are liking the small caps right now. 14-day RSI moving average still pointing up, along with the histogram and side tick on the RSI and CCI. Slight down on the MACD histogram. So can we get a reversal here and go in for a bar retest? That would be really great. It would come in at about $49. But I would still be more of the impression that if we were to get a complete retest of the bar by the Dow, by the SPX, we'd be looking at the major price consensus level on TNA, which would be just shy of 46. And going on to, hey, we'll just get all out of order today. XLF, the financials. You've got to have the financials on board for a real rally. And certainly this has been a real rally, and it does equate in the financial ETF. We ended today with a fat body spinning top, bearish engulfing the previous candle, which was also a spinning top. And we can see the stochastics heading down along with the CCI, the RSI, the MACD trying to turn over, get a bearish cross, histogram ticking down, only the 14-day RSI moving average still ticking up. So, and we have a downtick on XLF itself, giving us a target at 13.93 roundabout. It's almost there. It's not very far away. And that would be a very close to a retest of the 200-day moving average. If that was to break to the downside, that would be a clue that we are going to have some rough times in the very short term. We're very close to it, so I'll be looking to see if that craps out. That'll be a good tell. UUP. Yeah, it has little stubs on the top and the bottom. Is it a really weird looking spinning top? No, I just think that their stubs are just too little. But regardless, we do have complete crossover of the short-term moving averages. Yes, there's excessive separation, and yes, the long-term bearish bar or bullish bar is still in effect, so it should attempt to suck it back into itself. Now there are plenty of problems with this. 14-day RSI moving average heading down. The histogram is still heading down, although it's losing some of its strength. MACD very strong, heading down, along with the RSI, the CCI, and only the stochastics are trying to reverse course, but it's pretty darn early. So long-term moving averages should try at least to suck it back in. FXE, yep, getting deep into the long-term bearish bar and running into some problems. That's supposed to happen. That's what the bar is there to do. Stochastics trying to reverse themselves, but everything else essentially just pointing up. Histogram, MACD, RSI, CCI taking a breather, but 14-day RSI moving average also ticking up. I would like to see this one fall prey to congestion here in the bar and move towards the bottom of it, and then we'll see if it wants to hang out and destroy the bar gradually or if it falls apart, which will be entirely NDE driven. Moving on to, we already looked at oil, GE. Get a little foretelling of what the Dow should be doing. And has that happened? Well, we haven't resolved that downtick yet. Oh. Nope, we haven't resolved. Oh, yeah, we did. Every night I keep forgetting that we touched it on this little nobody day. Well, we have no we have no downtick today. Gapped up above the upper Bollinger Band and went down. 14-day RSI moving average still clicking down slowly. Histogram's trying to go down, but mixed. CCI ticking up, RSI ticking sideways, MACD ticking down, histogram ticking down. Yeah, we need a little bit more here. It'd be much better to see a better angle of descent on the 14-day RSI moving average, but it is in a position where it certainly could get that without too much effort. So, oh, what am I forgetting? Gold and silver. Wow, look at that. Gold gapping up and staying outside of the upper Bollinger Band. 14-day RSI moving average continuing its trek to the top, and it's almost there. Stochastics locked in place, CCI ticking up, histogram ticking up, MACD ticking up, side tick on the RSI. Very nice, all things considered. We do have some excessive separation in the long-term moving averages, which is normal when you emerge from the other side of a bar, whether it be bearish or bullish. So I personally think that on this one, it'll be a question of making sure that it maintains itself above the middle Bollinger Band line. Because going back in for a bar retest is completely natural and actually should be done. So that'll be very important. SLV, you can see the excessive separation in the short-term moving averages. It did not close outside of the upper Bollinger Band, so at least it has that going for it that's better than gold. All the secondaries essentially identical. This one also will be a matter of staying above the middle Bollinger Band line. And that's it. Very nice day. I mean, 22 points. It's not the greatest down move, but at least it's something. But I'm going to have a day of real selling to break the cycle of just buy any and every kind of dip, which we are still in that mindset. Well, the market is. I'm not. But there it is. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.